Now let's start with the S&P. That looks surprisingly familiar to where Bitcoin was last week. So it's last week, yes, last week and this week. So here it is in the descending wedge, and we know that stocks and crypto go together. Crypto did its thing because of the FTX situation this week with the massive crash. But now the S&P has caught up with where Bitcoin was and where Ethereum was as well. XRP has a different structure because XRP did a previous pump. So it's reached the edge of the descending channel. There is an overflow area. It hasn't reached there yet. How can I say it? We have two situations in this case. The way we had with Bitcoin, it either breaks, backtests, and shoots up, or it fails and comes down, which is what Bitcoin and Ethereum did. They did a reversal back into this channel. Now, to my wave count, we have all the wave. So if I don't count this swing, we have 1, 2, 3 touches to the top, and then 1, 2, 3 touches to the bottom. So the swings are complete here. But I have my reservation when it comes to comparing swings on the daily, the way I've seen them on long-term channels like the DXY or this one, the S&P. They can keep going for longer because we're talking about a different category of assets rather than crypto, which is more volatile and it takes shorter for them to accumulate or to distribute. So we have bullish divergences on the daily. And now if we want to check the 4 hourly, we have a couple of pivots here for the down. We don't have at the moment. There's no bearish divergence on the new indicator, but I can see a couple of them with my own eyes. So between these two peaks here, we have a double divergence down. So we have a bearish divergence on the stochastic RSI and then on the regular RSI. There we go. And also, if I am to look at this a little bit more closely, oh, that's it. Okay, that's okay. I thought that was more in the overbought. Come on. So that's the, okay, these two. Okay. So the S&P short, in short, it's been doing a lift over the past 4 hours. Today it went up and then corrected and then continued upwards. It did a nice lift today, and it's reached a moment of decision here. It could go up and break this wedge and then fail to backtest it and then drop down. Now for the S&P to do this drop, we need something along the lines of what happened for crypto, which is a large, big piece of news bringing the stock market down. Crypto pumped very significantly today, and I fail to believe it's the CPI indicator and the news, because apparently things are improving economically, but they're improving marginally compared to the size of the pumps. However, on the daily in our crypto channels, you'll see that the trend has changed to the down, and there's to me, unless we continue with again another 20% lift tomorrow to regain the support that we lost, we're quite far from a technical reversal. The stocks, however, at the moment, they are facing this decision, and I think important weeks are to come in terms of watching the fundamentals to see if the stocks are incentivized as a category to move up, or they're going to turn down and reverse. That's the general context. We do have a bit of conflicting information on the 1 day and the 4 hour, and that generally leads to some sideways, which is perfectly normal because this is what Bitcoin and Ethereum did when they reached this moment. They went sideways. What they do after those sideways days is important. I'm gonna check the calendar to see what's coming up next week in terms of news for the States, and see if there are any particular events that might influence the S&P. Because if we are to come down for the next leg down in crypto and the next leg down in stocks, again, there are 3 steps down. Step 1, peak formation. Step 2, step 3, according to, again, my technical targets and my measurements, which are very simple. And I put it here because of the support and resistance in the past. It is in and around this level. So again, according to my measurements, we have yet to do another leg down, and I'm not the only one saying this. Though it's quite a divisive topic in the space. Now, we're gonna start with I have quite a session for you tonight. We're gonna start with trading with the training part, trading a breakdown in progress. So a breakdown happened on its way down, and it happened quite suddenly. The first day I wasn't sure what's going on. I was just looking at it and seeing all the previous positive indicators switch to neutral or be invalidated, and then the second day it became quite obvious that it is breaking down. So this was the candle on Bitcoin the moment the breakdown started. Everything looked not everything, sorry, 75% looked fine for continuation. The channel was holding, the 20 EMA was lifting, the stochastic was down, and that was my big red flag, and the MACD was up as well. So the stochastic down was a big red flag. But then it went and news came out, and it did a 24 drop in a day. And then the next day we could see that, of course, because the EMAs had turned down, there was barely any chance for that to reverse so quickly or to do a retrace. I did anticipate a retrace on the second day, but there were more reasons for the drop to continue rather than the retrace. So even the retrace, I saw it as something quite short-lived, a couple of hours, a couple of maybe max 4-hour candles, 8 hours, and then a continuation. It was the continuation. So this is the swing that I look at for Bitcoin to break it down into the trades that we could have taken, and what would have been the signals to enter those trades, because there are a couple of signals that you can use. I've selected 5 for you today. Sorry, 6. I've 6. And then the more yeses you have to enter a trade, the more likely it is for that trade to be successful. So I'm starting by the assumption that you have seen the candle break the 20 on the daily, and again the breakdown, the 20 on the daily, the line of the channel, and the breakdown is starting. So the breakdown is continuing, and we have 48 hours of breaking down. How do we catch trades in that window without having started them somewhere around here, which would have been ideal? Here at the double top on the daily would have been perfect, but again besides the stochastic on the daily and of course the fundamentals, everything here looked like it was going to continue upwards. It actually went a step further than what it did here. It broke this divergence line and back tested it successfully and stayed above it for 1, 2, 3 days. The 4th day it collapsed massively. So I'm gonna use the MA, no, not this chart, sorry. I wanted to say the MA chart, but that was my first thought when I was planning this, I'm going to use this chart. I'm going to use our planning chart with the 20 EMA, the 55 EMA, and the VWAP. Okay, so here's the trade setup chart that we use every Monday to line up the possible trades. I'm going to discuss them as well after we're done with this. And here is where the breakdown started. And at this point, we didn't know if the breakdown is going to break the 20 EMA on the daily or not. It was just breaking from this ascending channel downwards. And we had the channel target, the conservative channel target, somewhere around here. Now let's say what is it? Roy wants to say something. Sorry, guys.
Just taking out this potentially is a big drop that's going to come.
Yeah.
This drop here.
Yeah.
Is the third spike.
Yeah.
This lift here will be
double top.
Double top.
Yeah.
Which will set our resistance line.
Yes.
Then when we do first drop, it'll set the support line.
Yeah.
And then we talked about this about going long for
Mountain Peak.
Yeah. It's a little different than the previous pattern, but it actually fits in with the consolidation phase.
Yeah, it does. It does, but I'd like to continue. I'm sorry. I'd like to continue because I
know I'm disturbing you.
You are disturbing me. Okay, so here, let's say you're watching this. You're watching this, and you're not here when this happens, and the spill happens, and it reaches the target, and it stops here, and it stops at 19,100, and this was missed. Now, if you look. When this completed its target on our daily channel, 19,100, okay, the daily 20 EMA was at 20K. So this breakdown broke that line. The narrative changes significantly once that line is broken because we've broken back into the channel and we've broken the 20 and the 55 EMA. So after this trade, things were clear that we were gonna go down. Like the trend continues down. There's no support on the daily in terms of the 20. We've switched bearish. We're coming down. You've missed this trade, no problem. There's always another trade, and I'll show you 3 possible other trades that you could have taken along this line that have the 3 yeses. Because again, I've only taken one because I was watching for one for the big one, but there are other smaller ones as well, and I'll show you the one that I missed because I didn't expect a second back test here. So this is the one that I missed. It happened very quickly. This was a second back test, and this was another juicy drop that we could have taken, but this was very, very fast, very manipulated. Also, if you had taken an entry here without a stop loss, this was a 5% pump. So again, you let it drop. It comes to the next level of support. It retraces. You let it retrace, and you let your RSIs reset to the top, and then you watch for entries. And I took an entry somewhere around here. That's where I was watching. This was New York, this was London and Asia, and this was New York. And if I don't have an entry planned for Asia, like a limit order, I tend to wait for New York to open, especially that 3 p.m. UK time candle is a high volume candle and it makes a big move. So that offers most times, not 100% of the times, a good entry for a trade. So I waited for this one, and the 3 yeses here were, it had the vector candles on for reversal on the 15-minute for traders reality. It had the stochastic RSI maxed out on the 15-minute, and it had my double top formation, plus it gave me a 702 entry without a, I was talking about this trade this morning, it gave me a 702 entry without a back test of my stop loss. I entered somewhere around here, my stop loss was somewhere around here, and it was very, very nice because it was less than, I think it was less than 10%. I'm measuring it here, but not very precisely, about 4%. But anyways, let's say under 10%. So this here took me all the way down to this double bottom, which didn't hit my target exactly, but I wasn't like, oh, my target was 15,399 or something like that, and came down to 15,444. But once I saw these 1, 2, 3 candles, I took my profit here at this double bottom, because I said it's not gonna, it's ridiculous to wait. It is a double bottom structure close to my target. Take the money and leave. So that this was a trade to take. So two things here. So trade number one could have been taken with a limit order with a tight stop loss. Especially after, but again, there's a big factor of luck here. I have rarely seen after a drop this big, this much of a retrace back to here. But it is a 5-minute arc. If you look at it, it's a 5-minute arc. This would be resistance peak. It came right to it. Okay, now let's say you missed this trade number two. After New York opened with 3 yeses. Don't worry, because I'll give you a list of the so-called yeses, what to look for, and I'll put it down in a document as well. I think I have the a couple of confirmation spreadsheets. There we go. 3 yeses. Okay. Yes, where's the, there, perfect. Now let's say you missed this one as well. Let's say you missed the opening of New York. You weren't watching, you had things to do. The trade takes you down to, that's why it's important to have your TA step by step. This is a 15-minute chart because I want you to see the double top formation on the 15-minute. But these are my 1 hourly levels. So when a breakout happens, I use 2 charts. I use the 1 hour chart for the stages of the breakout to zoom in on when I could enter a trade. And the second chart that I use is the daily chart. You've seen that my morning talks now are quite fast because the daily chart is the space that we're moving in. So we're moving in the daily space while taking 1 hourly steps, step by step by step. So the 1 hour chart, the levels that we set here they are. It bottoms out. It prints a double bottom formation here with the higher low. You wait, seeing that higher low, you can wait. This is the situation. You can wait for a higher high. So this was the peak. You wait here. You see a higher low. You see a higher low. You say, okay, we're breaking up. I'm gonna wait for another situation, another entry, and you see this happening here. It comes up. It fails to break the previous peak. It forms an M formation. You have another M formation. This one again has a reset of the 5-minute, of the 15-minute. I think pretty much, let me check to see. There it is. A reset of the 15-minute here. stochastic, I don't have the trader's reality, but I'm pretty sure there are some indicators for reversal here as well. Then the indicators for reversal don't have to be exactly on that candle, because we're talking about breakouts. So the volume of the market makers can happen in and around this space. So you will see, for instance, a sellout candle or a purple vector or a red vector around this space. I'm going to switch to Trader's Reality to check it, to show it to you. It was on Wednesday, 9th of November. Okay, New York opening again. So New York, no, sorry, I'm sorry guys, this is the one that I took. This is New York opening. I haven't checked. This one was Asia opening, and this one was New York opening. Nine. Damn it, this is XRP. My brain is very slow. There they are. There they are. So here I want to show you the vectors. Here's the sell-off vector here. Here's the sell-off vector here. Here's the sell-off vector here. And this is what I'm like. I need to see a vector in that M formation space so that I know the market makers have started the sell. Here again you have two, the blue one is for topping out and generally is followed by a green one, and then you have the sell-off vector here. So again, and you are backed up by the stochastic. The stochastic is the one that you're watching for immediate momentum, because the regular RSI doesn't react so well. You ignore these bullish divergences because the downtrend is very strongly down. Remember, once the 20 EMA is broken, the first days of that, there might be a retrace, but the first days were aggressive moves to the down. So don't worry about seeing bullish divergences, just follow your levels down. And as long as you take an entry with a very small stop loss, and this is where Bitcoin is very generous, because it moves in tight ranges. It's not like XRP, very spiky and huge stop losses. Bitcoin is a lot tighter in that space. So there was a trade here to take for Asia. There was a trade here to take for New York. And there we go. And you could have followed the trade down to here or to the target here. But there was another entry that you could have taken again on the 15-minute. This one here, the final stage of it. Again, this one didn't have. It only had the RSI. It didn't have. By the time this appeared, you were halfway down. So this was a small, very small trade. You would have seen your yeses here in terms of vector candles on the 5-minute, and the 5-minute will have given you a 702 structure. So all of them will have given you a 702 entry point. If you put the fib on them, there it is, 702. Now I tend to be very precise with that. Don't be so precise. Leave a couple of dollars to the market maker as well. There we go here. $702. The blue line is the 786. So if I see the blue line being touched here, I know that the 702 was touched as well. And this one here. The other way around. There it is, right about here. Perfect. So all of these 3 entries gave you vector candles, M formations, 702 entries, tight stop losses. So with the 702 entry here, 5% stop loss. This was the one, yes, because that's what the one I had. I remember I had a 10% stop loss on this one. This one was the biggest one, but it was the biggest gainer as well. And then here as well, very, very tight stop loss, 3%. Let's round it off to 10%. So with your space, let me switch this off because I want to show you now the percentages for, I want to show you the timeline and the percentages for the gains. So you would have had 3 possible entries on the way down once the spill has started. So once you have your breakout confirmed, once you have the trend confirmed, even if you miss this, so this one was very volatile. I let it finish because I was like, I'm not getting in there. Whatever's going on there is not looking great. What was going on here? Tuesday was election day. Election day. Yeah. So the Republicans were likely to win, and that was going to pump the market, and the market pumped, and then all of a sudden, in literally like a needle, a V-shaped recovery pull down. So even if you miss this, which is very chunky, excellent gains here, you still have 3 entries into your swings, and you can watch them very, very how can I say, it's almost a bit boring and frustrating. I was going through with my with today's XRP 702 entry. I was sick and tired of waiting for this to appear, but you have a topping out formation. You watch your 15-minute show you the range, and I know it goes a bit zigzag here, but you put the, there we go, because it's right here. So it's a small one. It's a small one, but it's the same one because it's a breakout. This is a 1% range within those 15-minute candles. If you remember 2 weeks ago, Bitcoin was moving in 2% ranges and 3% ranges. This breakout has had great ranges for the candles. That's why you need to zoom in on that entry. So you would have had here, after this peak is set and after this drop is set, you have 1, 2, 3, 4, 5, 6, 7, 8, 9 15-minute candles. I don't know how much. I'll say 2 hours. You would have had 2 hours to wait for this. You put your stop loss here and then you let it run. So you have 2 hours to plan for this entry once the bottom is here and you see the retracement. And it does make a little tiny, slightly lower bottom here, but it confirms itself as an M formation or as a triple top, if you want to consider this sideways as a triple top. So 3 great entries in terms of gains. You enter here, let's say you follow it down to the next level, and you might want to take your profit here because you say, okay, here's lifting, it's lifting, though the trend is down, and we had already broken the previous low, so you'd be mad to leave that trade, but it is 64% profit. Then the next one here, let's say you want to follow it down here again. You don't think it's going to come lower. I had 2 targets here, 16.2 and 15.3, and I watched it at 16.2 and didn't show any signs of bottoming out. It just came down. There was no double bottom. Lifted a little bit and then started pushing down. But again, I understand if you want to take your 8% here. If you go from here down to here, it's 14%, it's 140%, it's beautiful profit. Then if you take this trade, it's 7%. So even if you miss this 26% drop, you still can make 7 I forgot. 7, 7, and 6. 20. So you leave 6% on the table. Let's say you make 18% in this space. And let's say you make only one, you leave one trade behind because it doesn't work with your time zone, and it's still a nice trade. So next time we see something like this, I'm gonna have a look when we start preparing for the next breakout. Now I have a procedure. When we start preparing for the next breakout upwards, I'm going to take an upward swing, and I'm going to show you the same strategy for catching the drops. So you catch the drops and you follow it up. You catch the drops and you follow it up. Here you catch the tops, you follow it down. You catch the tops, you follow it down. And if it does break the previous low, stay in it. If you feel better taking some profit, take some profit. But once the previous low is broken in something historic like this, stay in it for the bigger targets that you have mapped out. Now, these were the practical examples that I wanted to show you on our swing this week. And just to recap, the yeses that I use for the trades. So trade 1 is order, trade 2 after New York opened. Here it is, 3 yeses. Clown. Trade 2 was here. And the other, where was the other one? Wednesday, November. Okay, this one was Asia. Okay, so this one was Asia. November 8th. This one here. But I don't want to put too many labels because I've showed them to you on the other one, and that was these two types were the two types that I want to discuss. So I wanted to first discuss the order trades, how you would put an order trade along a line with a tight stop loss above it, because once it's broken this line, if it is the real breakout and the real spillage, it rarely goes back into the same structure. So you can put a trade order there, put a 10% stop loss because you're in for a big win. In this case, it didn't even go back into the structure. So that would be the first type. But the second one with the 3 yeses, it requires a little bit more supervision, but you do have time with the 702 entry to plan for that entry and to watch for your yeses. And those yeses are, the first one was the topping out of the stochastic RSI on the 15-minute. You can check the 5-minute as well. If they're in confluence, it's even a stronger signal. Then you need the vector candles because they are the market maker candles, and you need them in that M formation. So you don't need them on the candle that you're going in, but you need them in that M formation because that M formation shows its purpose as a reversal. Third thing that I watch for is to see that double top formation, 3 peaks or the M formation. I want to see on the 15-minute that M formation. I avoid going into trades like this one with just a V-shape push down, because this might as well have been a 1, 2, 3, 4, 5. So why get? I don't have my 3 yeses there in terms of my my M formations. Why would I do it? I don't have it, so I stay back. I wait it out, and I wait until the move is done, until my big time frame, my large time frame daily is confirmed, and then I find along the downtrend those entries. And the execution involves a 702 entry or a 786 entry with a small stop loss. Bitcoin is the best one out of the 3 coins because it has the tightest peaks in terms of fib retracement. I would go for the 702. Sometimes I would go for the golden pocket too, because the downtrend can be so powerful that it doesn't push price action to the 786 or to the 702. That can happen. So 702 is in the middle. If you're watching it and you see a topping out at the golden pocket, you can take that as well. But those three yeses, the vectors, the stochastic RSIs, the regular RSIs, if they've topped out, that again, that makes it a good indicator. And then the double top formation. Now, in the overall context of this swing, I want to show you something that is not like an indicator or like a formation, but it is very valid in as far as swings down or swings up are concerned. And you have seen me say that on the chats for a long time. The backtest to the 20. The backtest to the 20 MA or EMA on the 1 hour is where generally you can watch for those three yeses in terms of entry points to continue the move down. Price action rarely, after breaking the 20 EMA or MA for support, whichever one you choose, as long as you're consistent and that's the one that you're trading, it's valid. They're slightly different because the EMA is more responsive, so I would choose the EMA in these faster moves. But if you have your regular MA and you use it consistently, that works just as fine. Just don't swap between them. Pick what's right on the day, because you want to do a trade and say, okay, normally I trade the 20 MA, but today I'm trading the 20 MA because that's it. Because that's inconsistent. It won't necessarily not work, but it's inconsistent. So whichever one you choose, I have the 20 MA. I say, okay, it needs to backtest. Around that area is where I prepare for a short. Here we had a trade here. So here and then backtested here. Here would have been a wonderful rejection entry to the down. This one, again, it showed itself, but it showed itself quite fast and then it started dropping like a lead balloon. So I didn't take this one, but again, technically it was perfect. It's just that this pump in 1 hour of 6% was very fishy. Here, price action tried to reach this and it didn't. And here, again, it would be a great entry for a short, but this one is a very short. Who wears shorts? Very short, but it was still offering 4%. Like, that's the beauty of where we are right now. You follow the right direction. The ranges, the percentages down are really, really impressive. So this is sort of like my I don't know how to say, my background flag, my background green flag for where I could enter a trade. I don't wait for the 20 to be backtested to enter a trade. If I have my three yeses at a double top formation / M formation, triple top formation, I will go in there. But I will double check that I am on the right side of the 20, and also I will double check to see, for instance, a situation like this, to see that it hasn't been tested too many times so as to break, because generally an MA is tested about 3 times before it breaks. Here it was tested once, twice, 3 times, 4th time it broke. So the 20 MA and EMA is like a milestone, like one of those, don't know what to call them, like a distance, when you're driving down the road and you see like a distance marker, like a distance block of stone that says, you're at kilometer, 0, 20, 30. That's the 20 EMA to me when a drop starts to happen. I'm like, okay, we've done the first drop, we've done the second drop, we've done the third drop. That's why I was so careful about shorting here, and I shorted only when it was rejected here at the 55 EMA. I lost a 15% here. I was a little bit more generous with my stop loss because it was worth it here, the 702 entry. But then I caught one, here is where I lost it, here's where I caught it. And I put my stop loss a little bit higher now because, again, I believe we will retrace. That would be another story. I don't want to get into that, but because that's for the trade setups. But that's my indicator for where we are on the way down. Now I'm gonna put all of this information into like a little document and send you the link tomorrow, because I planned for it today after I had cleared all my charts and my mind was a little bit tired. So I want to write this down in a more coherent way, and for you to follow when it happens, you know, to know that step one, check where we are in relation to the 20 EMA on the 1 hour. Check our 1 hourly levels, check our daily space, and then check for the 3 yeses. So that's how I want to structure that document for you to read and to have when you're playing this, because this is gonna repeat itself. We're gonna do a retrace now, and we're gonna come down for the third leg. That's what I believe. So that's the trading of the breakdown in progress. It's things that you already know. I wanted to put them in a breakout scenario and have a look at the case study in front of us, what happened this week, because there were trades that we had planned for and trades that caught us by surprise, because this is what a breakout does. It moves fast and hard, so it's an event to observe. Do you guys have any questions about this?
Mihail, I know you've been over it a few times, but the vector candles, can you just give a brief sort of explanation of that again?
Absolutely. Now, Lee, I will again. I'm no expert in vector candles, far from it. I know there are 4 types of vector candles. Blue ones, purple ones, they are the extreme volume vector candles. The blue ones are massive buyers from the market maker sides coming in. Purple ones are massive sellers from the market maker sides selling out. They are the indicators that show reversal. A blue indicator at the bottom of a swing shows reversal to the upside. The same for the purple vector at the bottom of the swing shows reversal to the upside. Blue at the bottom, reversal to the upside. Purple at the bottom, reversal to the upside. So the blue, you want the blue, the buyers, think blue buyers, at the bottom of the swing to follow it up. If the buyers have a blue at the top of the swing, that means that means a reversal for the down. So what the market makers do is they try to stimulate the market as much as they can, and they'll push one more stash of liquidity into the market so that retail gets stimulated and they come in and they buy again. And who's the one that's selling? It's the market makers. So blue vector is extreme buyers. At the bottom of the swing, we're moving up. At the top of the swing, we're moving down. Purple vector is extreme selling. Purple vector and it's a stop volume vector. A purple vector at the bottom of the swing has the same value as the blue vector at the top of the swing. So when you see a purple vector at the bottom of the swing, again, it's the market makers extreme selling, stop volume, like they push a lot of sales there, in again to see if there are some more retail that want to sell. And generally the purple vector at the bottom is followed by another red candle. Most of the times it doesn't have to be exactly like that, but generally when you see the purple vector at the bottom, it means that we're gonna move up. The purple vector at the top means exactly the opposite. It means that the swing up, buying, marking up the price, has finished and we're gonna come down. So the blue and the purple are the ones with the bigger volume, the stop volume. So they put so much volume in that direction that the move in that direction is likely to stop or to reverse. So I'm gonna make a note and write this down in the document as well. So the blue and the purple ones are stronger than the green and the red. The green and the red, they show volume pushed in by the market makers to reverse the direction. So a green vector at the bottom of the swing shows that there is volume for the swing to move up. The difference between a blue vector at the bottom of the swing and a green vector at the bottom of the swing is that the blue vector has more volume. That's why I find these vector candles quite useful and relevant. Has more volume to push up. So there will be, after the blue one, there generally are at least 2 green ones or blue ones, or 2 green ones or 2 blue ones. So you see 3 moves by the market maker pushing liquidity up. Here is where it starts, and then you have 1, 2, 3. So you had 4 moves in this swing. The green one is not so big in volume, but it shows again reversal to the upside. I watch it too in these times of volatility. I need to see, for instance, a blue vector at the top, and a green vector at the bottom if I'm watching to see that the move down has finished. The red one means that they're starting to sell, and if you see a red vector candle at the top of the swing, it means that the market makers are starting to sell, and you start moving with them because you don't want to go against them. You see the purple vector candle at the start, red vector candle at the start. Here at the top, sell swings coming. That of course correlated with your stochastic and with your information. So these are the 4 types of vectors. I think there might be a short document on Tino's website about the vector candles, but I don't think I don't remember exactly if I've read it, or if I've read it, it's very succinct. But that's the gist of it. So those are the signals that I watch for. Now, if you see, I'll tell you again, the exceptional situations. If you see 2 blue vector candles, one after the other, not like here. I'm gonna try to find one. Don't want to spend too much on it. I don't think I'm gonna find it here because this was horrible sideways. But if you see 2 blue vector candles at the bottom of the swing or at the bottom of a consolidation like this is mega pump for the up. Brace yourself because it's gonna be a long swing up. So for instance, in today's swing, I was watching for blue vector candles, and I didn't see any showing immense, very high volume for a big lift. So I know that the lift was big, but it was reasonable volume. So no mega pump signals. If you see 2 purple vector candles at the top of a swing coming down, that means mega drop. So again, something to keep in mind, not to be used as the only decision maker at any time and in any situation. We are not trading indicators. We are trading the movements of the price action, the swings of the price action, the patterns of the price action. We're not trading an indicator, but the indicator can help us figure out what's happening here. So the indicators can help us figure out this, for instance, M formation. Once we see this, we can go in somewhere around here. If we've missed the 702, put a stop loss above this and follow it down. The same here, this purple vector candle helped me understand that this is indeed an M formation and we're gonna come down. So, and I put my stop loss above this previous peak because Bitcoin gave me that space. Blue vector candle here, again, it helps you identify this little M formation here on the 15-minute. You catch a 702, you put your stop loss above the previous high, again, because it's worth it. It's a small range for, I can't even measure it. It's around 10%, and then you follow it down. And this blue one here shows that the swing is complete. If it's not followed immediately by a green one, there won't be generally there won't be another one in after the red ones. So you need to have another start of a green sequence to have it, to have the green one. But in short, that's what I watch for. So because we're talking about catching the breakout downwards, I'm watching for blue and purples at the top. The red ones are good as well, but the green ones, not so much, because if I see a green one at the top, it's likely to continue. I really want to see a sell-off, like in this swing. This one is my sell-off indicator, and this is what again allowed me to put made me put the stop loss a little bit higher, because I think this indicates that we are moving in a sell space, and this is going to turn into an M formation. But that's again, with the stochastic, with the bearish divergences, there's plenty of yeses there. So that's what I watch for in terms of the trader's reality vector candles. Very, very basic.
Excellent. Thank you very much for that.
You are very welcome. You're very welcome. And I'm gonna put all of this again, because I don't know how coherent I'm being right now. I'm gonna put all of this in the document with the 3 yeses, so that you have it there and it's easy to follow. Okay, so any other questions about the strategies I'll call it the strategy, the execution of shorts on the way down. If you've missed the big one, if you've missed the big entry, catching an entry on the way down. Again, I've showed you on Bitcoin, it's a beautiful coin to trade in times like this, because it offers the space to get in without a massive stop loss, and it does give you profits less than other alts, but it's less than alts, not other alts, because it's not an alt, but it does give you plenty of chances, and the risk management part of it is really good. It gave us 702, 702, 702 very nicely, and nice ways to get in without being stop lossed out. That was the training bit. Can we move on to the next part?
Sure thing.
Super. I was going to say, I'll take the silence as an answer as well. Now, the next part on the agenda is looking at the trades that we have planned, and what went right and what didn't go right, and why that was. So did we miss something? Did we not pay attention to something? Or was it just the space that it was moving in? So this was our trade setup on Monday. And I had two breakout trades, one to the upside, one to the downside, and one channel trade. Now, the channel trade didn't happen. And the reason why it didn't happen, I think it was partly my fault, because I had this line slightly different. You know, I don't count the swing that goes in when it comes to 1 hour channels. I don't count the swing that goes in. So I start the count from the next touch, and I need to see 3 touches to the top with complete swings to the bottom. So I didn't see, I had the line slightly wider. I think I had it somehow, I don't remember exactly. I don't even remember, like this week is, my head has been full of information following the breakout down with the levels. So that's why I'm a little bit, I'm mentally a little bit tired. So I don't, here, what I want to say is that I made the mistake of ignoring this swing. Had I not ignored this swing, I would have seen that we actually have 1, 2, 3 touches to the top, and 1, 2, 3 touches to the bottom on Monday. Was it Monday? Yes, on Monday. So we were ready for breakdown. 70 to 30% chances for an ascending wedge are to break down. So I miscounted this. This was my planning issue. I like to self-flagellate and mark my errors. That was one of the things I used to do as a beginner. I marked all my winning trades and my losing trades on my charts for a long time, just to see what went right and what went wrong. And it was really a great self-reflective process. And the second trade that we planned for here, fortunately, it happened beautifully. Where's my there? It happened beautifully, and it met its target to a T. After this, things started happening. Tuesday, election day hit, the FTX case hit, and there was this spike. After this spike broke this line, we were looking at this space, and I think I actually posted, like, are we gonna break? Are we gonna reach this space? Because in the morning, was it in the morning? Yes, the fact that we're gonna back test and move down to this space. So this was another no, this wasn't another trade. This was still part of this trade. So this was part 2 of the taking profit of this. That was the support line. This was the technical target, and this was the support line. So they were both hit. But at this when this broke, we talked about the change of trend, because it broke the 20K on the day, and breaking the 20K on the day meant breaking the bull trend. So back into the bear trend, back into the channel. And after that, the week went on, and we kept on planning the trades outside of this space, because we actually broke out of the space. So this wasn't planned. For this, I'm going to put an I symbol because we were watching here, and I'm going to put an orange symbol because it was completely new. This I didn't expect this to drop like this. 24% in a day. I did not expect that breakdown then and there. I was joking on the Discord. I said I expected this to happen in a structured, orderly way, because this is how breakdowns happen. And then after this happened, I anticipated a retrace to the previous level. That retrace didn't happen here. It happened here. So again, this would have, you would have, for instance, maybe tried to long this, because it is a reasonable range to long, but you would have seen, of course, after 1, 2, 3, 4, 5, 6 hours that it's not breaking the VWAP. So after such a rejection, I think even the most stubborn bull will stop longing here. So I would say again, this was a premature projection of this. So I projected the back test, but it was a day earlier because the drop still had momentum, and it was again a mess in the crypto world and pushed down. And of course, it's not only the mess in the crypto world. If we look at the technicals, because that's why sometimes I might seem uninterested in the fundamentals. If you look at the technicals, if you look at the relationship that you have with the 20 EMA on the daily, or with the 20 EMA on the 4-hourly, if the daily has been constant for a while and you think that there is a reversal going on, you check the 20 EMA on the daily, the 20 EMA on the 4-hourly, and then the 55 EMA on the 4-hourly is my next port of call in terms of checking for reversal. So those would be the ones that I would check to see if something is happening in a different direction. So here I expected the back test, but it didn't happen. So I'll put I didn't plan it as a trade because I said we're not going to wait for the back test to long it. Well, at least I'm not longing any of this. So now I'm just waiting for topping out formations to short. I'm not going to short as long as Bitcoin is where it is, as long as XRP is where it is, and as long as Ethereum is the strongest one at the moment. But again, I'm not looking to short in this downtrend market with the second largest exchange on the verge of declaring bankruptcy. Like, that's enough reasons for me not to long, just coming down and short. Okay, so today again, this long, we projected this long, and we projected a short here, a short here, a short entry here would require a little bit of a higher stop loss, above this entry point. I would put above this above this swing, or if your pockets are deep, above the previous support and resistance, above the 18.8, which I assume might be back tested. So if you right now, to transition into setting up for the weekend, right now where we are for the weekend space is the weekend space is the daily space, and the daily space is, I'm going to put a rectangle, is between the previous support and resistance line at 18,500, 600, wherever you might want to put it, and the possible target of the channel somewhere around 13K or 10K. So that's what I have for Bitcoin moving into the weekend. If we continue tomorrow morning on the way up and then New York reverses and pushes down, if New York finishes with a push down on Friday in the evening, that drop will continue this weekend, and it might be a big one. And if we do see Bitcoin coming down to 10K, I would be very, very content to know that the drops are done and now we're consolidating. So this would be the space. It's a big space at the moment, the way I see it, because I am including, I don't know how tomorrow is going to be. I don't know how tomorrow is going to be, but from where we are right now for Bitcoin, I'm looking at a 45% move. So it might not happen this weekend, but that is the space that I see it moving in. This weekend and the next week, this is the space that we're going to hold. Maybe the 10K level won't open all of a sudden, but we've seen 24% moves in a day, so I prefer to overestimate on the size where we are right now rather than underestimate and not prepare you for a bigger move, because this bigger move can happen. So going back to where we are right now, we've yet to see if the next trade is a short. I'm going to move this line so that we have, there we go, this is the 15K area. And if I am going to measure the consolidation, if we are going to move between this space here and here, this would be the 12K area. And I'm not going to map out the 10K space because that is the 10K daily space. We don't have structures on the 1 hour taking us to the 10K target. I have the daily channel that takes us to the 10K target, but on the hourly levels, the only levels that are mapped out are the 15,000, because again we've come from this level of accumulation to this level here. I expect us to come back down from there and then break down another level. Now I'm going to remove these arrows from our previous trades because there was a lot of movement this week, and I wanted to show you clearly the reflective process that I go through myself at the end of each day in terms of what's worked and why it worked, and what didn't work and why it didn't work, because it's very it's a very developmental process for your awareness when you're checking your progress as traders. So here we have we do have the possibility, and I was talking to Roy about the XRP trade, so we do have the possibility of this coming up, back testing the previous level of support, and then coming back down. So this is the first trade I see, a short. We might have topped out here, that's also possible, and we've done a 1, 2, 3, 4, 5. Let me check to see how the RSIs are. The RSIs are topped out on the 1 hour. Do we have a divergence here on the 1 hour? Not really. There's still a little bit more space in the 1 hour RSI. Do we have any vector candles? We do have a vector candle here in this M, which again, to me, it stands for the whole space, but I would like to see a vector candle, a purple or a red one, in this new M that's forming. In this, I would sleep a little bit more peacefully tonight if I were to see a second vector candle. I'm happy to see vector candles appearing here, and there's another vector candle here, because again, they show me that the sellers are waiting. So here's where I see it possibly topping out, if it hasn't done so already. I'm gonna put the second one. The second one is a straight line from where it is right now, just for you to know that it can also come down. If you want to, you can also start your position with half of your capital and DCA on the 18,700 or the 18,600 support and resistance line. So that would be the first trade. After this trade, we have a possible move down to the next level. I see. I only see short opportunities. Can we have a bit of a consolidation here? Absolutely. But I don't think that we are done yet with the levels. You will hear me complain about the levels. So I believe that this is the way I read this choppy, very choppy sideways, is a big M or a triple top formation. This is how I read it. The first yellow line is level 1. Where we landed now is level 2. I believe we have a level 3 drop to make locally, not only on the day, on the daily levels, but locally, because also now the 1 hour levels are merging with the daily level. So we have one more drop on the local levels, and it happens to be that the local levels need another step down. Now this step down, technically, so the measured move is down to 12,500 for the accumulation. So this here, I'm measuring if it gets up to here. Again, I'm anticipating the range down to here. Together, they would have a beautiful range in terms of trading, about 30%. 45% is the drop to 10K. Again, even if you miss maybe one of the swings, remember the relationship with the 1 hour is vital. It will come back once it breaks this 1 hour as support. It will come back and backtest it at least, well, 3 times is the average number. At least twice is the let's say the safer number. So that's it's really simple in terms of projecting the space. 2 shorts. I see 2 shorts, 2 short opportunities, one to the level that we've been to and the next one down. Now, what I was telling Roy is I'm adjusting the arcs at the moment. I did a lot of charting today. I'm adjusting the arcs at the moment, the 15-minute one, because what we're gonna live through is the 15-minute arc. And now I believe we have done on the 15-minute, the small one, I believe we have done the double top. Now we're coming down for first drop. Now, could double top be a little bit higher? Of course it can, because skyline is up above here. This is resistance peak. So in the 15-minute arc, we have resistance peak level, which is technically 20K, and come on, I'm trying to move this line, mid-range high level, which is somewhere up around here. So we could have on the 15-minute one trade down, one trade up, maybe testing the 19,600, and then third drop here, final peak, final bounce, final retrace, and then break down to, let's say, 12K. So this might be the scenario on the 15-minute space. Of course, a 15-minute arc can take about a week to complete, which would make perfect sense because these things don't take months to finish. So it would make sense for this final drop to take a little bit of consolidation. Now the 15-minute arc resistance peak is 20K. Let's see where that would take us on the 1 hourly space. On the 1 hourly space would get up to, so rather than, and this would be again a less likely scenario, but not impossible. Nothing is impossible these days. Imagine what they're doing right now is long squeezes. So they're trying to collect as many long orders as they can from the market before the big drop. So the pump and dump scenario, I believe, is what's happening now. I don't have any technicals that could tell me otherwise, especially when I look at the RSIs on the weekly and the 1 hour. So this would be a possibility as well, coming up for a bigger back test, in which case, again, if you want to long this and you have your 3S's, this is a 15% lift from where we are right now, so I can't tell you don't long this. Personally, I don't think we're going to get there. If we are going to get there, I am afraid that I will be caught between my decision to close my trade or to start DCAing in. The DCAing in option sounds very attractive right now because I don't think that the downtrend will change anytime soon. to be honest. Not after we have seen on the daily, where's my 20? Where did my 20 disappear? There, okay, I removed it accidentally. Not after we've seen the 20 cross down over the 50. So can we have the 20K back tested? The 20K would be the, this is what I'm doing. I'm trying to remove my squiggles, and I'm removing my, okay, I'll leave it like that. And I'll put the rectangle later. Sorry guys, sorry. There are so many squiggles there. So no, that's the MA now. There's no more squiggle. So this is what happened. It doesn't happen very easily. I don't think this is a fake out on the daily. Can we turn around and, you know, bring the whole Bitcoin ship above the floating line and just bring it, you know, with a super pump up above the divergence? That is very, I don't think that's possible, but you know, it is what it is. Crypto is very volatile. The whole situation right now is very volatile. So a backtest of the 20 EMA would be possible. Backtest of this line would be possible as well. What would happen is, again, we would be widening this range, so we'd be moving between this orange line and, I'm going to move the orange line a little bit lower, and this orange line, so we would be moving like that along the purple line. So that would happen in terms of technical space on the 1 day. That's, again, I wanted to have these possibilities moving into the weekend, because the weekend will be, if Friday finishes spectacularly strong in either direction, the weekend will continue the move, and it will continue with equal strength. I remember the past drop happened on Saturday, and by Sunday we were completely wrecked. So it happened over the space of 2 days. So that's where Bitcoin is going to. Do you guys have any questions about Bitcoin?
Not from me, thank you.
Superly. Now let's move on to Ethereum, and for Ethereum I'm gonna check again the trades that we anticipated and the trades that worked out. There are the trades. Ethereum's channel definitely wasn't ready for breakdown, if you ask me. We had only 2 touches to the top, 1 touch to the, I think that's also what influenced me. When I'm charting both Bitcoin and Ethereum, I sometimes tend to be influenced in Ethereum's moves by what Bitcoin is doing, which I'd say 90% of the time is perfectly justified, because Ethereum does do what Bitcoin is doing. However, Ethereum has its own horizontal stages up and horizontal stages down. So I think here I was looking at this as a sideways channel, which it is. I was looking at this thinking it needs another touch to the top. It didn't do it. Again, putting a little bit of disappointment in the charts. This did not happen, and it didn't happen also because of this. So massive move on Tuesday, market manipulation to a T. There it is, sell off 22%. Ethereum had fewer entries available for this short, but still 1, 2 clear ones that I can see here. If you missed this, again, missing this, perfectly reasonable. Again, you could have put a limit order below this lower low and the stop loss above the previous high if you want to be generous. If you want to be super tight on the stop loss above this previous support and resistance line, and you let it run. The advantage of limit orders is they cost less in terms of fees, and also with the stop losses you have your capital protected. So it's not like you're putting in something you're not watching and you're risking 80%. Oh, sorry about that. Now, so let's say you missed this movement, you can still catch some drops here, and these drops are quite valuable, again 19%. Ethereum also made a super recovery today. Today it's up at plus 20%. Incredible gains for the coins today. It's above the 50, 55. It's above the 20. The 20 is threatening to lift up. Anyways, I'll hold back on that and do that when we discuss the trades. So these two trades upwards were not successful because the trend wasn't upwards, we broke downwards. Did we meet our target? To a T. So that's why it's good to have the space mapped out, because you know where this is going. You know when it breaks this, it's going for the big yellow line here or the big yellow line here. It went straight to the big yellow line here, which comes from the past in a DeLorean. So it's right here in it as the center line of the swing. So it was the support, midline, center line, and then again it's back at support in its support role. So we had that happen, and we mapped it out very nicely. Again, I wish I had thought of doing catching a breakout in progress session before this happened, but then I wasn't so inspired because the previous breakout I was caught in it mentally and emotionally. So now I had the clear mind, having had that experience, to step back and actually see what I can trade once I've missed that initial, because I think that's why a lot of traders don't trade breakouts. They're very hard to prepare for. You always think it's going to go the other way. So even if you miss and you get the direction wrong, you're still gonna be able to catch entries once you know the trade and the trend, and once you know the daily space that it will be moving in. So Ethereum did a lift today, and I think it went straight to the level that we anticipated. I didn't think it was going to lift this much. I said it this morning that I see Ethereum moving up to the previous level of support and resistance. I thought here it was where it was going to stop. It looks again like this is a double top formation, and I'll be posting these arcs tomorrow. This is a 15-minute arc, and here it is, a double top formation. I think this is a double top formation. It's a V-shaped recovery. It might do a blow off top. Again, we have a nice range, and resistance peak is here. This is skyline, resistance peak, mid-range high. So it's already got to mid-range high. I think it's complete, and it gave a nice entry, a 702 entry, and it hasn't done a higher high yet, which is very nice, very well behaved of Ethereum. So what we got was the point of the breakout here to a T. We got the levels down. What we didn't get was the retracement upwards on Monday, and then the retracement upwards after this drop, because I anticipated a back test, and that back test was very, very weak. And then the M2, I remember, on the day broke, which was the support here, and the spill continued. So that's what happened on the day. Now, removing these lines, I'm gonna go to the daily chart and show you the tragedy of the space. Okay, so we are back in this we're back testing, we're not back anywhere. We are back testing this line. I had it a little bit closer to these. Again, I'm finding it because I have I'll leave it like this. I leave it like this because this is the extra space, the overflow area. So we back tested this line. That's what happens in a situation like that. What is happening with the MA? So the 20 was crossing down, but now they look like they're barely touching now. So we don't have the crossing confirmed. We have the stochastic pushing down. And when you see the 1 week stochastic turned down, this has to come down. Look what happens when it comes down here. Look what happens when it comes down here. 3 weeks of pushing down, multiple weeks of pushing down, huge weeks of pushing down. Same here, same here. It won't be different. The weekly regular RSI hasn't crossed the midline, and when the RSI crosses the midline, again the uptrend is stronger on the technicals. So again, I believe it's the weekly and the dailies moving both Bitcoin and Ethereum, and I don't see how we're not gonna drop any further. Ethereum hasn't yet made a lower low. I was expecting the $1,000 Ethereum and it didn't arrive, but I still expect it this weekend. So the space that we're moving in for the weekend is gonna be I believe this space, and I will include the lowest, because when this happened, this drop, I remember this drop happened on a Sunday. I was in the supermarket and I had a trade in Bitcoin and I took profit in the supermarket. So it was a Sunday. It was a Sunday drop that happened that led to this low. And I expect the final leg down to be equally surprising, because it's only the market makers that have their orders ready, or the good, well-prepared traders that are waiting for this. So I will include this space. It is in line with my target, so this would be the target because of this consolidation here. So between these two previous levels, if I put it at breakout, surprise, surprise, this is the line that goes all the way from one of the tops, not the all-time high, but it creates this channel, and here's where this target takes us. Very similar to Bitcoin. That's why I tend to be influenced sometimes in moves, because they are so similar in daily patterns and weekly patterns. So that's the space that I see it moving in. But again, I won't have any 1 hour structures to show you taking us to $400 worth of Ethereum. I only have the structures that we're in at the moment. So if I'm gonna measure this, this consolidation space here, and I'm gonna move it here at, there we go. I'm gonna remove this, and this would be level 3, and this would be a, let's say, $900 Ethereum. So this would be now, you know, Ethereum likes to do a double top and then a higher peak, and then it comes down 2 levels. If we're not coming down here to this level, we might be making, so you might, if you're in a short and you have a tight stop loss, you might be stop lossed out, and then something like this might happen. So it pushes up. I don't think it will reach the 1500 level. It would be mad if it does so, to be honest. It would be crazy, crazy, crazy on Ethereum's part to do so. But again, we're talking about crazy ranges because of the space that just opened this week with the large drop. So we could see a higher high here in this swing and then a push down to the next level. That could happen. The next level on the daily, as I have it mapped out, is around 900, so that would work with our target. Now, because of the new 15-minute arc that we're in, here it is. If I am to take the space of the arc, let's say, again, the arc will be playing out for the next couple of days. It will be playing out faster if there is more volume kicking in and completing these swings. The target of the arc would be 700. So I would be taking profits step by step. I would be taking profits around 900. I will be taking profits, let me qualify this a little bit better. I will be taking profits around 900 if it's not breaking the previous bottom. So 875 is the previous bottom. If it's not breaking this and it's showing some 1 hour / 4 hour double bottom formations, I would be taking some profits, because I don't want this to be just the third drop in this bigger daily arc, and then we could be coming up for final peak, final bounce, final retrace on the daily arc. So that's where the arcs help us in their pattern, because we can anticipate their moves. So that's what I see happening here with Ethereum. A lift, a possible lift a little bit higher, because it likes to do that, you know. Double top lift, no, not that, not there. Where do I want to show it to you? It was somewhere around here. No, maybe here. So we had a triple top, another higher high, and then a drop, not to this level, to the next one. Similar here, not. There were some that I can remember, but not here on these 1 hour levels. And I'm at the moment I don't have the patience to look for them. But Ethereum, you can take my word for it. Ethereum likes to do a lot of double tops, higher high, and then push down to another level. So here's where I have my doubts whether this is going to come down from where it is right now, or it will do another push up, collect some more longs, and liquidate some more shorts, and then head down to a lower low. The way Bitcoin did, why wouldn't Ethereum do? So that's these would be the two possible trades that I would be looking for. I wouldn't be watching this weekend for anything else other than shorting. I do have a short in XRP and one in Bitcoin. So, and I do have a larger stop loss because of the trend. The trend is down, and what happened today, this fast move, is definitely to me definitely a long squeeze. So I have the confidence to keep my stop loss a little bit more generous and let it play out. And if I have to DCA, I'll DCA. I know that game very well, but I don't think my short will be trapped for a long time, considering where we are right now in the market and considering where the economy and the crypto market scene is right now. So that's it from me. In the morning, I'll be posting the new these charts with the trades and the space on the day that I see us moving in on the weekend, and then I'll keep you posted every day that of the weekend if there are any particular moves that are worth following.
I'm going to do a session tomorrow at the regular time. Just a short one, just to set up, because I reckon the swing, the support and resistance is getting set up now. So just to set that chart up for the consolidation cycle that looks like it's kicking in here. If it's anything to go by, it could run on for a week to 10 days before we get another big move. if it holds form.
Excellent.
If there isn't some big news.
Yeah.
I'd like to go through that tomorrow just to set it up. And then this lift, wherever this lift goes to now, will give us a lot of information to set up the cycle. Yeah.
Yes. Okay. Super.
Regular time tomorrow.
So you can have your morning coffee with Roy tomorrow.
Super.
Super. Now, if you guys don't have any more questions, I'll let you go. Enjoy your evening, and I'll see you on Monday in the morning.